Hey everyone, welcome back to the Professor Trades channel. And in today's video, we're going to be covering crude oil analysis. I'm going to review every time frame to help you succeed. In addition, we're going to be going over natural gas. So if you trade natural gas, stay for that as well. I'm going to give you lots of insight into market structure, and that's going to be so important for the week ahead. Now, if you've never had a chance to jump on my channel, let me tell you a little bit about who I am. I'm a college business professor. I've been teaching graduate and undergraduate students for over 15 years in business, including finances as well. And I'm an investor and trader. I've been actively trading for over 8 years. And like many of you, I struggled for a long time. My first 3 years, I was not a very profitable trader, but then I got it. I got with the right mentorship, I got with the right community, and I was able to turn that and become a six-figure trader. And now my goal is to be able to give back to my community. So I've got some learning goals for you because that's the educator in me. Let me show you those on my screen. What is my plan for you today? Number one is for you to learn the key zones of each chart that I'm going to share with you. And then I also want you to feel better about your trading decisions based on the entire analysis that we are going to do. So that is my plan for you on this video. And if you stay until the end, I want to give you a little freebie as a thank you for watching the entire video. I'm going to give you access to the complete guide to Renko charts. This is about a 20-page colorful guide that I put together, and I'm going to be able to give that to you absolutely for free. And I'll share that information at the end of the video. Okay, so let's get into our charts and let's begin with our crude oil analysis. Okay, so let's do a quick review, especially for those of you that are in our trading community. This was a beautiful, beautiful setup that we took from Thursday into Friday. Again, we set up this point here. We had seen that price had come right back down to a floor at this particular juncture. And so we had this setup beginning to buy from this position up. Now, our first exit was near that 61.8 Fibonacci level. And again, some folks ended up taking it all the way a little bit higher. So congratulations to some of you who stayed in that trade to this area right here. Now, here is where we began to change our methodology. And this is where you have to realize that if you're in a buy with oil with so much activity, right, and so much volatility, this is where we begin to look for our reversal zones. And so what happened here is we began to enter sells in the club at this 78.6 area. We love trading in this area when we're using our Fibonacci levels, which we use all the time. So then this trade went from closing out a buy to grabbing our sells right back down to the floor. And then, of course, by then it was already Friday. We were out of the markets. And what happened is that crude oil continued to drop and break that level. So we are going to be focusing on right here, right now, where price is currently at. And so again, my goal for you here is to be able to give you structure points, be able to give you zones, both to the bottom and to the top side, and give you some confirmations so that you can feel better about your trading decisions. So let's get into the chart. And as we always do, we are going to start from scratch, and we are going to start on our weekly chart so we can see that and of course, I always end up marking this. So we can see that this last weekly candle, right, is extremely bearish, right? Extremely bearish. And so we want to begin to look at our zones and our possible pivot points from a higher perspective, because that's where institutional money is being traded. Okay. If we actually go up one more time frame and we look at this monthly level, okay, we're actually going to start here on the monthly, because we're going to begin to look at a couple of things. Number one is, let's take a look at where we are right now with Fibonacci sitting on the monthly level. Okay, so we are currently at the 50% when it comes to the fibs on a monthly. Okay, so obviously we know that price can turn around at any of these fib levels, because fib levels, if they're marked correctly, they're also strong areas of support and resistance. So I just wanted to kind of see, because we understand that, the 61.8 is usually, a very nice spot where we get a large number of reversals. Now, it doesn't mean that we're going to go all the way down there, but again, just to keep that in mind, that would put us at about 75.50 from where current price is at 77.93 if we head down to the 61.8. So it's something just to kind of put in the back of our mind, right? We're on the bigger time frame. There's a possibility that we can drop to lower fib levels, but I keep reminding our community all the time, and this is what we focus so heavily on, is we want to make sure that we trade what we see versus what we feel, what we think may happen, because that can get us, in trouble. Last week's video, I was looking at price structure, and I thought maybe we would hit 85 or even higher last week, but that didn't work out. So we had to obviously trade what we see. So when we think price is going to go down or up, that could be based on, some bias. But if you're going to be a good trader, you've got to trade what you see. And luckily, we're able to put aside our biases and go with what the charts are telling us. So on the monthly, we are there. Let's take a look at the weekly, right? Let's take a look at the weekly and see if we needed to adjust any possible fib levels, okay? So we're going to bring this down just a little bit to have that touch right there. And then our takeoff point is going to be the same. So you can see this here a little bit more clearer now, that on the weekly time frame, first of all, we have a very strong bearish engulfing candle. Number two is we are currently at the 50%. Number three is we have seen price turn around before in this area. And if you look over to the left, right where price is at right now, when it was here before, this is back in August of last year, it rejected, came up, and then eventually we went higher, right? Now, the only difference is that this was an active weekly candle that retraced. This is an actual weekly candle that has already closed. So that is a little bit of a difference, and why we're probably anticipating some more movement, possibly a little bit more to the downside. Okay, so I'm going to kind of leave that fib level there because I want you to see how these fib levels can impact the different time frames as well. Because again, I think fib levels at the higher time frames are always going to hold a lot more water. Okay, so now we begin developing our plan. Okay, right now we begin developing our plan, because if we look at this structure point right here, and I really want you to focus in on this daily structure point, because this is where we can begin to catch some of these retracements back up. Remember, it's a brand new week. It doesn't mean we have to have a red candle. We can start green and then turn red, or vice versa, start red and turn green. These are the important decisions that we make together as intraday traders. Okay, so we can definitely see here that this is going to be a crucial point. We've been here before and we've come down, so areas of resistance. We've been here before and we've gone up, areas of support. Now we are here again. So this is going to be an area that I like to mark up beginning on the daily time frame. Okay, and again, remember that areas, okay, and pivot points are never going to be an exact actual number. It's going to be an area, right? So we've got to look at this area, right? We know that a candle on a small time frame can come down, right, as a false breakout and then shoot up. Okay, so we're aware of that, right? Just like it happened here on this wick. So we have to understand that we are in an area and not a specific price point. You don't want to marry an actual price point. So here, we definitely are now looking at structure from a daily standpoint, and we have to begin to build that plan so that you can execute much better trades. Hey, and by the way, if you have not yet checked out our trading community, we have a full app with real-time trade alerts for you. We've got free member coaching. We do group coaching sessions every day in there. We've got an entire member chat zone with over 200 traders, learning articles every Saturday, coming to you, a full video section, all included. You get full access. I encourage you to take your trading to the next level. check it out. You can either use app.professortrades.com or go to theprofessortrades.com and you will be redirected. And hey, don't forget, if you're getting some value on this video, hit the like button, subscribe if you're new. And again, you can head over to theprofessortrades.com to look at more information. So let's continue with our daily analysis. So this is going to be a very strong area to look at. Okay. So if we take a look here and we add a little Fibonacci, okay, from where this price originally took off from this bottom, okay, to this top, and let's change our fibs now to white so they stand out, okay, we have reached that 88. We have not gone yet below the 100 level. Now, this is super, super important, so I need you to pay attention here, okay, and this is why. The 100 level on a Fibonacci, if, for example, in this case, you were looking to buy it up, that needs to be your exit. Because when price closes below the 100 Fibonacci level, especially on a higher time frame, that is usually an indication that the trend is going to change. It could change temporary, it could change for a long time, but that is a structure point where the trend is going to change. So the good news on this structure is that we are pretty close to the 100. So your risk actually comes down if you're looking for a buy possibility from these levels, because you already know that the 100 has to be your exit. So if you were trading on a higher time frame, okay, and obviously we'll talk about Sunday gaps, and everything else, right? A long position would look something like this. Let's say we were taking it from this spot. You always want to go back up to where price, the last high point of structure, which would be here. But here is your 100. Here is your lowest wick. So you've got to incorporate your spread plus the lowest wick, so something like that. So you're looking at a nice 4-to-1 return if price can go that high, okay, if you can take that price all the way down. So if you're a swing trader, that's an aggressive and a nice opportunity for you. Here's the beauty part of that. If you are a scalper, like many of us in our trading group are, right, you keep the same structure points. And so this is one of the tips that were on my plan for you, how to make better decisions. Here's what you do. You enter 2 positions, right? Now, not 2 aggressive positions. If you normally traded a standard lot size in Forex or a CL contract on futures, you would cut that in half and you would just enter 2 positions. You're looking for one position to give you profits of 20 pips or 20 ticks. You close that position. And then the strategy is on the second position, you move your stop loss into profit, right? So that way, if you do get stopped out, you cashed in on the first one and you broke even, or you maybe made a small gain on your second one. But if the second one becomes a runner, then you've just hit a major, major home run. Of course, you're always protecting your runners. So if you grab one for 20 on the lot size number 1 and on lot size number 2, you let a runner go and you move it into stop profit as you're moving. That's how you can reduce your risk on these trades. Okay, and we talk a lot about that in our trading community. We give examples. I remind everyone before every trade, and it's a strategy that's been working very, very well for folks. Finally, they realize that by lowering your lot size, you can become actually more profitable because you enter 2 positions and you have a lot less stress on that first position, right? And another strategy is you enter the first position, and if it hits your 20, then it hits your 20. But if it goes against you, you might get a better price point to enter. So again, we talk about all these things in trading psychology in our group as well. So that's kind of where price is at on a big, big time frame. Okay, so I'm going to kind of remove this for now, and I wanted to give you an example. Let's drop into our 8-hour time frame. Okay, let's drop into our 8-hour time frame. Again, this 100 structure point is going to be very, very crucial. Okay, now many times what they do is, and again, we might see this here, right? We might see this here. Well, they come back and they flush out the most recent lows. This is part of the money concepts. And usually when they do that, they bring price down to the 127, which is that 74.50-ish area that we talked about before. So if they bring price that far down, they would have taken out this low, and this low. So this is going to be a very key area to look at. Okay, very key area to look at how price reacts within this zone right here. We're either going to get a reversal near this area, or we're going to close below the 100. And if we close below the 100, we are heading down towards 75. Okay. We are heading down towards 75. So this is the main structure point right now. This is going to be a very crucial structure point on crude oil, because if we start dropping below 77, we should be heading down to about 76 to 75. Okay. Now, on a 4-hour time frame, again, we still do not have indication of any reversal happening yet. We love to use the SAR method inside of our group. You can see here, we still have parabolic SARs, okay, all on the top side, pointing us that we are still in a bearish position, okay? When we drop to the 1-hour chart, this is now where we can begin to see a little bit clearer. And again, there is no price action right now telling us that we are going higher, okay? There is no price action. And I'm going to give you a quick buy stop scenario here in just a few minutes. But right now, we have no price action that is screaming we're going higher. So, the gaps are not going to really count, because if we gap up, then we'll come down to close the gap. If we gap down, we'll come up to close that gap as well. So we are going to label this area as our gap. Okay, so this is going to be our gap right here. And again, you've heard me talk about it over and over again. We trade live Sundays at 6 p.m. to get us going for the week inside of our club. So again, that's another access that you'll have to. And we look at gaps all across the board, from indices to oil to gold to Forex pairs as well. And so the gap is very simple, okay? If price gaps 50 points or more, we begin to look at it and we will entertain those gaps. But again, the markets have changed. What happens nowadays with gaps is that we tend to get, let's say a gap opens up and it opens up in this direction, and we'll make this green. What's been happening lately is that the gap will run for a while, okay? Where gaps used to close within a few minutes and even a few hours, now on crude oil, sometimes we're seeing gaps staying open for 24 to 48 hours. So what does that tell us? You can't go heavy on your lot size, right? You've got to go with a very minimal lot size, whether you're on Forex or futures, because this is going to be a swing trade back down in this scenario to close the gap. But again, we've been very profitable because sometimes we stack a couple of positions. To the flip side, if the gap opens down here, and we'll make this red, same scenario, right? What we've been seeing is the gap can run away for a while, and then eventually both of these come back to close the gap to the downside. And in this scenario, it comes back up to the upside to close the gap. So that is going to be the very interesting point as we look at this 1-hour timetable, okay? Because we are here at a very key area of structure. And when you look to the left, you can see all the previous traffic that we've had at this structure point, which is getting very close to 77, but actually closer to 77.50. Okay, and again, crude oil loves those psychological numbers. So as we get into this area here, okay, what I want to do is I want to be able to give you the first possible buy stop scenario for 20 pips. So if you want, you can set this on your phone, hit a buy stop, set your profit. Okay, I'll even give you an area that you may want to look to close if it doesn't work out. But these are usually impulsive moves, and we have an over 90% win rate on these impulsive moves. So again, you can definitely look at this as a possible area. So for that, we want to drop all the way to the 15. Okay, so we want to drop all the way to the 15. Okay, now if we look here at the parabolic SAR, we can still see SARs right here in this area to the top, which means price obviously is still moving further down. So let me give you when the next SAR is going to happen. Now, if you look at this structure point right here, this is usually what happens. You get impulse, retracement, and then continuation. So we just saw that, right? That just manifested and that just played out. Okay, so the first SAR flip is going to happen right here. When this structure point, let me put an orange line here. When this structure point is broken, we're going to get our first SAR to the top side. Now, because the downward pressure is so much, it could be a very short-lived SAR, right? Just like here, we only had 1, 2, 3, 4 before then the move came down. But these impulsive moves can yield you even 30 pips, sometimes a little bit more. So the first buy stop scenario would be right above here where the SAR would happen. Okay, so you would be looking at somewhere right here. I'm going to make this green for entry. We're talking about 78.15. And again, this is only for a quick counter trend 20 pips. You would be looking to get out at 35, which would be the top of this structure point right here. And that's going to be blue. Okay, so 78.15, 78.35, buy stop scenario to basically bring price back up, grab 20 before it hits the major structure again and cash out. Okay, and cash out. And then, of course, your stop in this scenario would have to be whatever the most recent low is. Okay, now you're going to get a SAR flip. So basically what's going to happen is you're going to get a small little dot that's going to be created down here at the bottom. Okay, it's going to be, in my case, it's going to be green. So that basically becomes, wherever that happens, that becomes your stop. Okay, I'll just give you an example here. That would become your stop. And again, we do a lot in the community on the SAR strategy. So if you want to learn more about that, come on in, check us out. There's no contract. You can cancel anytime and just see the massive value that you're going to get. So that is the buy stop scenario. In the meantime, when we look at this from a structure point again on a higher time frame, and let me get rid of this here. Again, nothing is saying right now to buy from this point, this 77.93. Nothing is telling us right now to buy. We really have to see how price is going to react at that level that I gave you, which is going to be about 77.50, and then we shall see. Remember the fib levels that I gave you? That's going to be important. Okay, we are in that area right now, so let price action dictate what is going to happen as we open up the week for crude oil. Okay, so that is kind of the full analysis. And again, you know, we keep our members updated. We have everybody chatting inside of our chat zone, and so that's why trading in a community is much easier than trying to do this for yourself. Okay, so that's crude oil. If you got value on crude oil, you know what to do. Smash that like button for me. If you have any questions about the crude oil analysis, you can drop that below in the comments and I will get back to you within 24 hours. So now what I want to do is I want to go back full screen and I want to jump into our natural gas analysis for some bonus content for you, for those of you that trade natural gas. Okay, so let's begin with natural gas. We are starting here on this weekly time frame. Now listen, there are so many gaps both to the top side and to the bottom side that have been hanging around for months. So when it comes to natural gas, I don't even entice myself. I take zero gap trades when it comes to natural gas because it's too unreliable. Okay, so natural gas, you've got to really focus in on structure. You got to focus in on smaller lot sizes. Natural gas, to me, is the one commodity that is great for a swing trade type approach because when it moves a lot in either direction. So looking at the weekly, obviously we finished very bullish, right? Last week, a very bullish week last week. So as we kind of look at this analysis here, what I'm seeing is, let's see if we can get a touch point again here. So we do have a valid trend line. We've got two touches and we're approaching a third touch on that trend line. So again, if we break the trend line, then we have the possibility to go higher. We are also at an area, let me make this white. Again, this is the big time frame. We are in an area of previous support. Will that turn into kind of resistance? We shall see. Remember that these are areas and they're never an exact spot on the chart. Okay, so this is our weekly for natural gas. If we add a Fibonacci level, okay, from where this high was down to this low, then you can see here that we are approaching, we've broken and closed kind of right at that 38.2, a little bit above. We are approaching the 50% Fibonacci level. Okay, so if we bring this down to a daily standpoint, now here's the magic. Right now you can begin to see we kind of move that trend line just a little bit. Now we can see that we are in this crucial area, right? Previous support here. Are we going to get that rejection here? Previous rejection here, and we saw what happened. we are right back here again, and we've got a trend line right here. So as far as the daily is concerned, if we're going to go higher, okay, then we're going to need some type of candle closure above this particular area, and then possibly retest this area, and then possibly continue to our next fib levels, which would be 61.8. And if we go higher, the 88.6. But again, I encourage you to trade natural gas zone to zone, level to level, fib level to fib level, because that'll keep you out of trouble. Okay. Now, if we take a look at this intermediate fib from this high right here, you're going to see that we have probably come probably to the 86, a little bit higher than the 88.6. No, we're actually right at that area that we tend to normally like for our reverses, around that 78.6. So we are in a pretty good area where we are kind of justifying with based on Fibonacci, based on previous support, could turn resistance, and a trend line. Okay, at the higher time frame, right? We should be structure-wise, okay, looking at a possible scenario where even if this gaps up some, that then we come back down structure-wise. We shall see. We shall see. If we break this down into the 8-hour, we can see it here a little bit clearer. Okay, so this is the 88.6 on the big area there. Let me get rid of this 61.8. Actually, I'm going to do a brand new fib level for you, so that way you have it right here for you. Let me get rid of this one. And let's go with the intermediate fib level, which would be from here down to the low and across. So you can see that we are near that 88.6 trend line. So we're at about the 78.6-ish right now, right? So if I was looking purely at the technicals here, I would expect to see, where's my arrow? Let me just grab it. I would expect to see price react and come back down to at least the next fib level, right? We haven't looked at gaps yet. We don't know what's going to happen with Sunday gaps. But again, that would be the scenario. And again, for this particular case, I am not trading natural gas gaps because they're too unreliable. So that is the area. Again, if we get closure above, then we're looking for this scenario of break and retest and run up here. Again, there's a lot of open gaps on natural gas. There's been a gap since January to the top side, and we still have lower gaps that have not been closed either. So I just kind of wanted to give you some value on structure on the different time frames. Here's the 4-hour, okay, ended in a doji candle. We might be seeing a reverse, and we finished the 1-hour in a little bit of consolidation here, okay? So there are liquidity candles right here in the short time, which I think they'll probably come back and get. But again, we're not going to go with what I think. And if we go with parabolic SAR, we still have SARs to the bottom, meaning price is still trending up. We would need to see that change starting at the 15-minute level, okay? So since we're here at the 15-minute level, let's give you a sell stop scenario based on the SAR strategy, right? So once we break this structure point, we're going to get entry right here. So that would be a sell stop. Green will be entry. And then we're going to shoot for our 20 points, which is going to bring us right back to the bottom of the zone. So beautiful. This is going to be our exit for a quick 20 if you want to grab a quick 20. And that's going to be the blue. Okay. And again, your stop would be above the most recent SAR. And you can see here, we already have SARs that stop. So, that would actually be the SAR for your stop loss on this scenario right here for 20. Okay. So it's almost like a 1-to-1. Okay. But again, your entry does not happen until 2.2048. And then you can move the stop loss to the closest SAR that may appear here. So again, we talk about this all the time. A lot of our members are using the SAR strategy to help them get into a trade, but also tell them, hey, when not to get into a trade, right? So if they were seeing a zone here, right, and they were looking to possibly sell this, now they're not making bad decisions because they realize that the SAR on the bottom, right, is still all at the bottom, meaning we're still going up. So it's really helping our traders make a lot better decisions. And I'm glad to see that many of them have had their first profitable weeks and months since coming over to the club and joining as well. So that is the value for natural gas. Again, if you got some value on this analysis, you know what to do. And if you have any questions about natural gas as the week proceeds, again, we update our charts every day in our group. You can go down below and you can add those into our comment. Now, as promised, I promised you that you'll be able to get a copy of that Renko chart. Let me bring that up again. So if you go down into the video description, I'm going to have a link for you on how to get this complete guide to Renko charts. It's pretty powerful, okay? And I actually show you how to use the SAR with this as well. I've got a video on this as well, and this is absolutely free for you to download this. And that way you can have it with you. You can review it, you can read it, and then you can look at the video that's inside the chart to be able to help you learn exactly what the chart is having you do. And again, that link is down in the video description. Okay, I hope you got some value today. Listen, whether you're in my group or not, I always wish you massive, massive success in your trading journey. Stick with it. Too many people quit before the blessing happens. And usually it's because they're struggling. They don't know who to turn to. And that's why purposely, intentionally, I built this training community to be able to give back from everything that I learned along the way. As I get close to entering my 9th year doing this, most people are still not doing this 9 years later. Okay. And again, I'm not an entertainer. I'm not going to give you flashy editing videos. I teach and I show, and we trade as a community inside of our group. And that's why we're seeing so much success. Okay. Active people every day in there. I'm giving you 2 analyses a day, especially if you're a London trader, markets close. We do an evening analysis. You're getting value, value, value for pennies, pennies, pennies a day. So I hope to see you join our trading community. The worst thing you can do is not do anything, because if you try it and it works, what happens then, right? Stop being so negative minded. Okay, to my community members, thank you for your support. We'll see you for our live gap analysis on Sunday evening. For the rest of you, happy trading week. Don't forget to work on your mental wellness and your physical wellness, because that is more important than making some extra money in the trading market. If you're not spiritually connected, if you're not mentally connected, and if you're not physically connected, all the money in the world will not matter. So if you stayed until the end of this video, I want you to go down to the comments and type in mental wellness, because it's so important to have mental clarity, okay, in anything that you do, but especially trading, whether you're part-time or full-time. Have a great trading week. God bless you, and we'll see you soon.